Hey, how are you? Justin Brennan here, multifamily investor. Thanks for coming into this quick little case study that I'm going to be breaking down an actual deal that we did, 31 units, $1.5 million deal, and I had as little as $17,500 out of pocket in order to control and run this 31 unit, $1.5 million deal. I'm going to break this down for you here shortly and give you exactly how you would do it, how you would find the deal, how you would analyze the deal, how you would raise the money to close on the deal. And we're going to show you that here right now. Let's go. Okay, so the process of buying any apartment building, I don't care if it's a 2-unit deal, in this case a 31-unit deal or 100-unit deal. It's going to follow the same 5 pillars of buying the apartments in our method that we teach, the 5-method rule, right? Find, analyze, finance, close, and manage. Today I'm going to go over finding, how we analyzed and how we financed this 31-unit deal case study right now. But I want you to follow this trend because this is how you do it. Let's go. Okay, so here we go. Finding the deal. How did we find this deal? And how would you find any deal? I'm going to walk you through leveraging what I call the on-market to get to the off-market deals, because this was an off-market deal. But how did I get it? How did I get it? There's a couple different methods. You have all these gurus and people teaching you all these different methods and ways. This is the most efficient use of your time. If you are a new person getting into this space, how you actually execute and get into your first deal. Number 1, stop looking at 50-plus unit deals if you've never done this before. I don't care, with all due respect to the great Grant Cardone or anybody out there telling you, go big, go home on your first deal. Never going to happen. Okay, the chance of you executing on that, you might as well go try and break into the White House. It's just not going to happen. If you're a newbie and you've never done this before, the chance of you being able to execute on a 50-plus unit deal is borderline 0%. Okay, it could have happened, sure, but meteors can hit the world as well. It's just not likely. So I'm going to try and give you the exact method of how you can execute this if you're brand new or newer to this space. So, 31-unit deal. Why is it that size? Because those are bite sizes. You can actually take this on and execute. I'm going to show you the numbers. You're going to leverage the on-market deals to get access to the off-market opportunities. This was an off-market deal, okay? So what I did is I went on Crexy.com. I looked for 8 to 30 unit deals on Crexy.com, okay? From there, I found 3 properties. From there, I found 3 brokers representing them. You can see the broker's information in the bottom left. From there, I analyzed all 3 of these properties. From there, I scheduled the tours with the brokers at the properties. Eyeball to eyeball, business card. Hi, how are you? Let's take a tour. Maybe it's a group tour. Maybe it's an individual tour. Tour the property. You're building a quick relationship. Let me show you how this works. From the tour, I realized the deal doesn't pencil. Surprise, surprise. Obviously, guys, Crexy.com only shows you about 40% of the deals actually available on the market. The on-market deals represent about 40% of the actual deals. Okay? 60% of the deals that actually make sense, the ones that pencil, the ones that trade, never make it to those websites. They never make it to LoopNet. They never make it to Crexy.com. They never make it to CoStar. They never make it because they are traded by the brokers within their databases pre-market. Okay, it's not that it's not on market, it's that it's pre-market. Okay, 60%. So from the tour, I said, hey, Mr. Broker, look, took a look at the deal. Thanks so much for your time. Doesn't look like that deal's going to make sense. I mean, where we're analyzing it at and where the seller's at, too much of a gap. They're probably not going to go for that. Oh, yes, they're not going to go for that. Okay, totally understand. Look, we are buyers in this market. We're going to buy. I'm looking for deals very similar to this. You know, John, Mr. Broker, do you have other stuff maybe coming on market, stuff that isn't on market yet, stuff I can look at? You can send me some emails on. We're going to buy in this market. Would love to do it. Would love to do it with you. Can I get on your email list? Can I start seeing some stuff that's pre-market? That's the conversation. Next thing that happens, by pitching for the other deals, 3 weeks later, a call and an email comes from Mr. John the Broker, 31-unit deal, pre-market. Bada bing, bada boom. That is how you do it. Leverage the on market to get to the off market. Keep in mind, if any of these gurus are telling you send letters, make calls to the sellers, reach out direct to seller, direct to this, direct to that. Look, it's not that it doesn't work. It does work. However, it's not the most efficient use of your time. Because for every single letter you're sending out, for every single call you're trying to make, for every single seller that you're trying to direct to, the brokers are doing 5x. Okay, they control the markets, they control the inventory, they control the gateways. So you can be efficient, or you can spend a ton of money and time trying to go direct, which you can do, and it does work. But when you're newer and you're just trying to get into this and you don't have a lot of capital and time to spend direct to seller, then the next option is to leverage the good brokers in the market, okay, to get to their off-market opportunities. And you may be saying to me, well, Justin, they're not going to talk to me. You're right if you're trying to go for bigger deals, which is why when all these gurus online are telling you, go after 50 plus units, go for 100 units, go for 200 plus unit deals, go big or go home, there's better economies of scale. I understand that, but you have no chance and you know what to execute on that because the brokers are not going to give you the time of day. Now, a broker on a 31 unit deal, a broker on an 8 to 30 unit deal is a mom and pop broker. These are local, smaller brokers. They are going to call you back. You can actually conversate with them and not a 3-level down assistant. So that's why you stick in this game plan, 8 to 30 units for your first few deals, okay? And when you execute that, now you're going to have momentum. Now you're going to be able to walk into the marketplace and have some kind of, resume to talk about. But if you don't have the resume, you got to start there. Leverage the on to get to the off. I hope that makes sense. So that is how we found the deal, okay? That's how we found it. Boom, we're done with finding. How do we analyze? Here's how you analyze the deal. You're going to download a deal analyzer. It can be ours. You're going to get a free one here today. Download ours. Use it. Very easy. Plug and play. We have multiple models, but we're going to give you the very simple model because I don't want you to get confused. If you haven't used Excel a lot, I want you to be able to plug and play. Everything in blue, you can plug and play and adjust. Everything that's kind of black is hard-coded. Simple 3-sheet deal analyzer for these multifamilies. That's how we got started with them. We have much more elaborate ones that people get when they come into our mentorships and stuff. But for you today, download the deal analyzer, either ours or somebody's, okay? You're going to look at these metrics. You're going to underwrite. You're going to back into a deal. When you underwrite, you're going to back into a deal. The deals that make sense are the ones that are a 14% IRR or greater, 6% cash on cash or greater, $1 million loan amount or more, okay? There's obviously a lot of other metrics, you 1% rule, 75% rule, this rule, that rule, all these rules. I get it. But you're going to back into some very important numbers because if you can produce these numbers from a property level, you will be able to produce numbers good enough to attract money, investors into the deal. Okay, so that's how you do this with as little out-of-pocket money as you can. I'm going to show you that here in just a minute. So here we go. So 14% IRR or greater, 6% cash on cash or greater, $1 million loan amount or more. Why the $1 million loan amount? This is so you can go get Freddie and Fannie Mae loans. Those are the best interest rate, best terms, best everything. That's where you want to be. Anything $1 million or more in commercial real estate, you're going to get the best terms, the best interest rates, the best everything. It's going to be easier for you to get that loan than a $300,000 home loan. Okay, and I'm going to show you that. Okay, I'm going to show you how to do this. But here we go. Debt coverage ratios. You've heard DSCR loans, debt coverage ratio, DCR. It's the same thing. 1.2 to 1.25 or greater based on today's financials of the property. Not hope and pray numbers 3 years from now. Today's financials. Okay, you're going to back into these numbers. Okay, back into these numbers. And if you have questions on this, this is why we're doing it. But that's how you'll analyze a deal. Okay, so that is step 2 in the process. There's obviously a lot of nuance to this, but I'm trying to give you a high-level case study of exactly how we did this deal. Okay, so analyzing the deal. So this deal produced an 18+% IRR and a 10+% cash on cash. And I'm going to show you that here in just a minute. But that is how you're going to analyze a deal. Let's keep moving on. Raising the money. This is where everybody tends to get stuck. When I ask all the people out there, what's your biggest bottleneck? What's your biggest hurdle? Where do you get stuck? They always say the money, the financing, the money, the financing, the money, the financing. I totally get it. That's because you're creating a self-limiting belief that you're thinking that you need to have the money lined up or the financing lined up or all the stuff lined up before you actually go and start executing. That's not how it works. That's the secret. You don't need to do that. Here's the secret for you. You technically don't need to have a single dime to invest in real estate. Technically. You just need to have friends that have money to invest in real estate. Because if you can find the deals, you can analyze them, you can put them together, you can show value, you can run and you can operate, you can do the whole enchilada. You are extremely valuable to somebody with money. Because people with money know one thing: in order to make more money, I need to move that money. If I can move it with you and invest in a real estate deal that makes sense, and you're going to give me a return based on the numbers, and I like and I trust you, here's my money. Okay, here's my money. Raising the money. The deal leads. You've heard Grant Cardone talk about it. Deal, debt, equity. Deal, debt, equity. 1, 2, 3. In that order. Do not do equity before deal. Do not do debt before deal. Now, some people say, well, I need to have some sort. You can get soft commitments, meaning you can have friends and family and people you know, people you don't know. Say, yeah, if you have a deal, I'll give you money. But no one's giving you money without this beautiful thing called a deal, because the deal will drive the ship. Okay? So raising the money, you have to have the deal, the debt, and the equity. The debt, you're going to get somewhere between a 65 to 75% loan to value, loan to cost. Your equity, you're going to be bringing in about 35% to 25% based on your loan amount, right? The delta. So let's break down the deal. Okay? Let's break down that 31 unit deal. Exactly how did it come together? What did it cost? How much money in? What kind of returns did we give? And how did we structure it? Okay? So we bought the deal for $1,525,000, 31 units. Okay? $85,000 in closing cost. I think this was about 4% of the purchase price, give or take. $300,000 renovation to improve the property so we could raise the rents. We were all in at $1,910,000 into that deal for 31 units. Okay? Keep following me. So $1,910,000 all in cost. We went out and got a loan. I believe that loan was about 75% loan to cost. $1,432,000. The delta was the equity. Okay, which was about $480,000 in equity down payment that we had to bring in. Okay, how did we bring that money in? $48,000 came from me. Okay, however, when you do these deals and you syndicate, as it's called, and you're bringing yourself as well as other people into the deal, you get fees for doing that. Very standard. So I got an acquisition fee for 2% of the purchase price. That's about 30 grand. So 48,000 in, 30,000 came out. That's a $17,500 out of pocket. Literally, Peter to pay Paul. Now you'd be asking, well, where does that money come from? That closing cost number. 2% of that's in there. Very standard process when you do this stuff, okay? So, now you're saying, okay, great, Justin, you're $17,500 out of pocket, $48,000 goes in, great, $30,000 comes out. Well, how do I get the other money? The other $432,000, Justin, how in the world do I get that money? Well, how did we get the money? The deal. Remember I said deal? Deal. Deal, debt, equity. If your deal sucks, you raise no money. If your deal makes sense, you raise lots of money. The loan will find it. The equity will find it. The loan will find it. The equity will find it. Because me to you, think about it for a minute. If I came to you and I said, hey, $25,000 minimum investment into this deal. Your money is going to projected returns of 18% a year on your money. 10% cash on cash return per year on your money. And we're going to 2.5x your money. So if you give me 100 grand, I'm giving you 250,000 back. You give me 100 grand, I'm giving you 250,000 back based on the projections. So if I came to you and I said for $25,000 minimum investment, I can get you that, that, and that. Would that be of interest to you? And you're probably going to say, well, yeah, who wouldn't want to make 18% a year on their money. That sounds like a good deal. Can you send me some information? You know, Mr. Investor, yes, I can. And here's when a beautiful pitch deck goes out that explains the deal in grave terms. Would you like a copy of one of these in digital format? That's a template. You're going to get it today for free. Pitch deck, deal analyzer, understanding how to do this A to Z. This is how you do this, you guys. And you keep it 8 to 30 units on your first deal or two. It's bite-sizable. You can make this happen. You can. I did it. This is how you do it. And from 6 investors, we raised the money. $432,000 from 6 people. Done. Dusted. And now, as the sponsor of the deal, I'm in control of a $1.5 million deal, 31 units, and I was in control of it. I got the fees. I ran the whole thing. We got great returns on it. Now, you want to know what the sexiest thing about the entire thing is? 24 months later, we took the property, which was $5.25 million. If you remember, that's what we bought it for. We put in $300,000 in renovation. Okay? $3.6 million valuation when we got done. We did a cash out refi. All the investors, so all $480,000, all $480,000 went back to the investors. Some of that was my money, $48,000 of it. So we all got our money back. Plus, on top of that, we got another 15% return on top of that. And then we still own the deal currently today. We're cash flowing it beautifully every month. Everybody's getting distributions. We got all of our money back, and we're playing with house money, and we got a 15% return on that, and all that cash out that we got was tax-free, and we've gone off and we bought other deals. Guys, and don't tell me this can't still happen. Now, with interest rates and certain things, depending on market environment, sure, you got to be a little bit more creative. But this is how you structure it no matter what. And I don't care what market you're in, this is how you do it. So, look, I hope this makes sense. I hope this makes sense. So today, just in recap, we found the deal. I showed you how. We analyzed it. I showed you how. We showed you how to finance, structure it, raise the money, all that stuff. That's the 3 of the 5 pillars of doing this. The 3 of the 5 pillars of doing this. All right, look, for coming in today, I just want to thank you for coming into the case study. I want to give some freebies out to you. You can download right now. It's going to pop up. You're going to click this button. You're going to get all these things I'm going to show you. Free pitch deck, so you can raise some money. Okay, this is one of the best pitch decks you'll ever see in your life. You get it today for free. Just so you know, we spent thousands building this thing for you today, free for coming. Thank you. Number 2, 87-page book that you're going to get. You're going to download directly finishing this. Lastly, you want to do this all within 90 days? Do you want to accomplish this in the next 90 days? Here's a 90-day guide, week by week, that you're going to get right now that's going to break it down step by step of how you execute this. Step by step, day by day, week by week, boom, 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 boom. You get this for free right now. All the freebies. If you want to take it to the next level, look, it's one thing to have the information. It's one thing to have the information, and some of you will be able to execute this. I love it. If you want extra hand holding, if you want to learn this and have somebody literally hold your hand and just want to have a strategy call about where you're at and where you want to go, click the link. You're going to book a free strategy call with me and my team. It's not a high salesy call. It's not designed for that. It's to understand where you're at and where you want to go. Because ultimately what I'm looking for is people that we can partner with around the country, with well-trained investors who know what they're doing. We can find deals together. We can analyze them together. We can grow portfolios together, all that stuff. We have a fund that wants to invest. We can invest alongside people, et cetera, et cetera. That is the bigger picture. But I need to know you're well-trained, you know how to do this, and we can partner, and we're all trustworthy people. So that is why the strategy call can be there, to learn how you would get involved in that, how you would actually learn this process, have hand-holding all the way A to Z. So that is your ability today. You can book that call right here, right now. Get all these freebies. Once again, thank you for coming in. Hope this was super helpful. Take care. We'll talk to you soon.